Hi everyone. Welcome to this webinar brought to you by Bursa Malaysia and managed by LifeChamp. My name is Nazura and I will be the moderator for today's session. Our title today is Do you know how to trade like a savvy warrant investor? Warrants, a lesser known yet powerful instrument, often play a key role in their strategies. But what exactly makes trading warrants so unique? Unlike stocks, warrants are leverage tools and hence they can help amplify your returns. On the contrary, if the market moves against you, you may incur bigger losses as well. Thus, understanding the warrants mechanics, spotting the right opportunities, and managing the risks are all part of a trading like a pro. What separates savvy warrant investors from the rest? How do they decide which warrants to pick? And how do they mitigate risks like time decay and market risk? So today, we are honored to have Miss Vanessa Tong to share her expertise on how to trade like a savvy warrant investor. Before we proceed, allow me to make a short disclaimer. Please be reminded that everything that's shared in this session is mainly for educational purpose and by no way we are providing you advice to buy or sell any securities. You are 100% liable if you make any investment decision. Now, allow me to briefly introduce our esteemed speaker for today. She is none other than Miss Vanessa Tong. Miss Vanessa is the warrant specialist at RHB Investment Bank, where she applies her comprehensive knowledge in equity derivatives and wealth management. She regularly conducts seminars and webinars on structured warrants to her clients nationwide. Prior to her current role, she had 6 years of experience in wealth management, which included expertise in structured products and adeptly handling a diverse range of client portfolios. Vanessa is a dual license holder of the Capital Market Services Representatives License (CMSRL) from Securities Commission Malaysia and holds a bachelor's degree in economics from University of Malaya. With that being said, let us warmly welcome Miss Vanessa Tong to the floor. Good day, Miss Vanessa. How are you today?
Hi
Hope
Nazura,
you are
thank you
doing
very
well.
much. I'm good today.
Okay, so you may start your sharing session now.
No problem. Hi
Okay.
everyone. Good evening. Thank you so much for dialing in and spend your time with us today. So I know that today is I would say it's a really important day for a lot of traders because it's the US CPI release day, right? So at 9:30. So you may excuse yourself for, maybe like um 10 seconds to look at the results. All right, so without further ado, let me just share with you what we're going to talk today. So I believe that Nazura already introduced me, and I hope that this is not the first time I've seen you. So it means that you have already dialed in for a few presentations or also maybe like attended my seminars. So today's agenda will be talking about like four um, main points. First of all is to understand the fundamentals of warrants. All right, so you learn how warrants work and their role in your investment strategies. But as we mentioned that today's seminar will be more into the intermediate level. So I will go through these a bit more quickly. But if you have any question, do drop us because so we can discuss together. And secondly would be the market terminology that is going to make simple to you. Something like intrinsic value, premium, gearing. There's so many, so many bombarded like words like, when we always talk about the intrinsic value of the warrants, we always talk about effective gearing, sensitivity. So you'll be thinking, I'm only investing in just like, for example, Yinsen or Gamuda warrants. Why do I need to know about all this stuff? All right, so you need to understand what are these terminologies before you make an investment in any of the structured warrants. All right. Thirdly would be the how do you select the most suitable warrants for you? Definitely there's no best warrants. There will be warrants that's giving you very good return in terms of gearing because you make so many percent, I mean, in terms of return. There are also warrants that's going to make you lose a lot of money, right? So which is the best warrant for you that is suitable for you, right? And last but not least will be, how do you navigate the risk effectively? So we know how to invest, we know how to buy a warrant, but do we know when do we need to sell our warrants? All right, so that's about today's agenda. I hope it's interesting for you, because I've been thinking about how should I outline this to be more interesting and to attract, some of the, a lot of you who are actually amateur or intermediate or even advanced investors in structured warrants. Okay, so what is a structured warrant? I believe every of you have your own trading platform. You'll be using RHB, you might be using RHB TradeSmart, or you have your own trading platform. You will be seeing the same thing. All right, so this is an example from my RHB TradeSmart screen. Incur is the mother share. So let me just, okay, never mind. So Incur is the mother share. All right, so you will see all these small like mini Incurs, like Incur C36, 37, C38, and last on this list will be Incur WA. All right, so these are actually different. They are all warrants, but they are different because structured warrants and company warrants are different. All right, first, when you see C or maybe H or PW, that is not starts with like this one, CWA, they are all structured warrants. So structured warrants like put warrant and call warrant. There are two types of structured warrant. All right, and then the one after dash is, it starts with W, it's a company warrant. You will see they are quite similar because they are actually cheaper than the mother share. Look at their reference price, 3 cents, 6.5 cents, and even Incur company warrant, Incur WA is actually 43 cents. So they are all, most of the time, they are actually not higher than the mother share of the, okay, that's one of the reasons why we invest in structured warrants, because it's cheaper. Okay, oh my God. So never mind. All right, so structured warrants, very brief, very quick introduction about structured warrant and company warrant. So they are different. Like I think from the comment session, I've seen Mr. Kong actually mentioned that he actually made quite some good profits from KGBWB. So this is actually an example of company warrants. All right, so the first main point that they are different is that structured warrant, is issued by the financial institutions. So RHB Investment Bank, we are one of them, one of the issuers of structured warrants. In the market, you will see Macquarie, Maybank Investment Bank, Kenanga Investment Bank. They are all the issuers of structured warrants. Right? While for company warrant, like example, I have shown Incur WA. Incur WA, so this is a Incur company warrant that's issued directly by Incur. So the company itself, they actually issued this company warrant. So Mr. Kong mentioned KGB, so that is the company warrant that's issued by KGB. All right. So when there's this issuer, like we issue this structured warrant, we are also the market maker for this warrant. So structured warrant, that's market maker, while company warrant, there's no market maker. That means for the prices of all these warrants is determined by the demand and supply, the demand and supply of the warrants. So if you're willing to sell at this price and I'm willing to buy at this price, that will be the last done price for the warrants, okay? Not last done price, the market price for the warrants. While for structured warrants like the call warrants, like instant call warrants, since there's this existing, since market maker is there, will be providing the bid and ask prices for all these structured warrants. Okay, so for maturity period for structured warrant, you have to be really careful when you invest in it, because it only lasts for 6 months to 5 years. It's shorter. While for company warrants, it's up to 10 years. Where upon maturity, upon expiry, settlement method for the structured warrants in the market, generally they are all in cash. All right, so you will get cash if you get it settled in the money, or it's out the money and you will not get back any cash. While for company warrants, they are mostly settled in shares. So you'll be able to get some of the mother shares if your warrant is expired. I mean, according to the exercise price. Okay, so stock code CCW, it's very simple. It's call warrant. Call warrant, it will actually follow the same direction as your mother share. So mother share goes up, call warrant will go up as well. While for H or PW, currently in the market, especially the Hang Seng Index warrant, they have this new name. PW means put warrant. While some of the other like stock put warrants, they are still named by H. All right. So after the stock code, Yinsen dash W, Yinsen dash, if you have seen H, A, HB, or H something, that's actually the put warrants. All right. So C, they are the call warrants. As easy as that. So company warrant starts with W. Okay, so we are cool here. So structured warrant is actually a form of derivatives. However, I mean, it's definitely listed on Bursa Malaysia, so all of us can invest in it. However, for this structured warrant, even though it's a form of derivative, it's listed on Bursa equities. All right, so you do not need to actually have any derivatives account to trade structured warrants. And third, I think it's very simple. I mean, it's very obvious that it's actually costs a fraction of the mother share price. So which means it's relatively cheaper than buying a mother share. Okay, so this is about structured warrants. While this thing that we all actually know, they are not like, okay, they are tracking the shares performance, but they are not like shares. Because when we actually invest into shares, it's very simple. We look at the shares fundamentals and we look at the target price and we'll just buy and sell. And I would say it's more straightforward. However, for structured warrants, it's not like shares. It's a bit more complicated. For example, there's effective gearing. You can see all these warrants key terms: effective gearing, sensitivity, implied volatility, premium, and it actually seems very, I would say, more complicated than shares. Definitely, that's for sure, because it's a structured product that derives the value from the underlying share. Okay, so today we are going to dive into how to understand all these like more thoroughly to make an informed decision on all your investment strategies. Okay, so an example, exciting. 99 Speedmart, okay, 99 Smart shares and also the warrant 99 Smart CM. Okay, so this is actually a warrant that's issued by RHB Investment Bank. So this is actually a snapshot from Bloomberg, but I just stated down the price when we just launched it, 99 Smart CM. When we first launched this call warrant, the price was 9 cents. All right, so when I would say last year was quite a good year for 99 Smart. It has been, performing really well after, since its IPO. So closing on the year end, 31st December, the price for 99 Smart CM is actually at 19.5 cents. All right, so this is actually if you're an investor, you certainly know that this is actually the price for the warrant bids price. It's not the price for the shares, because the shares is costing more than that. Okay, so the shares was at 1 ringgit and 99 cents on 23rd September, while on the 31st of December was 2 ringgit and 47 cents. So for share, it actually went up for 24%, as stated here. And while for warrants, it actually gained from 9 cents to 19.5 cents. So it was about 116%. All right, this is when, good days. This is an example for structured warrants. Okay, then let us see what's next. Okay. Okay, so another very popular shares, Gamuda, and also the RHB issued structured warrant Gamuda C20. So it's not C20, but it's C20. Okay, so 1st of October, an example, Gamuda shares was 3.96 ringgit, and the warrant bid price was 7 cents. Okay, while at the closing, 31st December, the share price was 4.47 ringgit, while the Gamuda C20 was closed at, it's not closed, I would say the price that I actually take this off the screen was 14 cents. All right, so share actually went up for 12.88%, while the warrant achieved 100% gain. Okay, so this is how we see the good side of structured warrants. When the mother share went up, your warrants is going to give you a better profit than the shares. All right, however, since it's a double-edged sword, we know that when it gives you a very good, an amplified gain on the shares, when it goes down, it's going to be magnified as well. All right, so just look at this very short window of time, this short period of time, from December 13 to the 31st December. So the 13th December, it was 4.88 ringgit, and the warrant price was 17 cents. And then at the end of the year, it was 4.47 ringgit for Gamuda. So it went down for 8.5%. So the warrant price also from 17 cents, it became 14 cents. And in that case, if you invested at the peak and you are selling it on the last day of December, then you'll be making a 17.65% loss on Gamuda C20. So this is actually, I would say, another side of the warrants, and also the risky side of the warrants that a lot of people that they are very afraid of. Okay, all right. So on the side of risk investing in structured warrants, I'll be sharing later on. That will be my last part. All right. So today and now, I'm going to tell you about the benefit of structured warrant. So besides from its okay, that is the next point. All right, the first thing would be the liquidity. All right, so market maker actually provides liquidity on all the warrants. For example, this is a snapshot for LHI C19, a call warrant over Leong Hub International Berhad. You will actually see 500,000 units queued on the bid and the ask. All right, so these are actually the liquidity that's provided by the market maker, and also this is the price that we are actually queuing at the price that is predetermined, which will be shown as the live price matrix on our warrant website. It will not be available on your trading platforms, but it will be available on RHB Warrant website, which I will introduce later on. All right, so in this case, when the market makers are providing liquidity to, in the market on these specific securities, you do not have to worry that there will not be any buyer or seller on the warrants that you want to buy or sell. All right, so for market makers, we will be buying back all the warrants from you at the bid price that we queued at, which is according to the live price matrix. It's actually a promise that we have given to our investors that we will actually buy back at that price. While if you want to sell at a certain price, you may actually queue at higher. Maybe there will be someone in the market who's taking up, from you. While if you think that you want to just let go all of your units, then you can just sell it at the ask price that is offered by the market makers. All right, so we'll always be there for you. But one thing to note is that for warrants, they are always limited units. So we have, usually for RHB, we'll be issuing 35 million units. So once a lot of people buy, like they buy, and they keep it, we will not be able to market make that efficiently because it's low on inventory. All right, so I'll be talking about this later on at the risk section. So that's one thing you have to take note. That is, these warrants that's always sold out, although inventory, you have to avoid from buying those warrants, okay? All right, so this is very obvious benefits of structured warrant is small capital outlay, as we have seen that usually the warrants, they are relatively cheaper than the mother share. So these are the examples. UEMS C1G is obviously the mother share is UEM Sunrise. C1G, the share price on 2nd of January was 1.07 ringgit, while the warrant price that was on the 2nd Jan was 3 cents only. All right. Tenaga, the share price are always expensive, I would say. I mean, it's a blue chip stock. It's 14 ringgit and 68 cents. While if you think that Tenaga and you're really bullish on that, but you have very limited capital, like I only have like 10,000, but I want to have some taste on Tenaga performance, I think it's going to do really well. So you can actually shift to Tenaga C20 because the warrant bid price is actually 7.5 cents for 1 unit. And it's providing an effective gearing of 9.7 times, which I will explain later on, because this is the very, very important characteristic of structured warrants. All right, and JPG, Johor Plantation Group. So this is the warrant JPG CD. The share price for JPG was 1.31 ringgit, while the warrant price is only 6.5 cents. All right, so this is why a lot of investors, they have decided to invest in structured warrants rather than put everything into the mother share, because they can actually do a very good diversification of their pool of funds, or they can actually buy a lot more, diversify on the number of stocks they want to buy and the securities they want to invest in. Okay, all right. So if you don't know yet, the US stock warrants are now available on Bursa Malaysia. As RHB Investment Bank, we are the only issuers for US stock warrants at this moment that's providing live price matrix. All right, so there's only three. You don't have to think that so many things for you to invest, but I would say these three counters are really popular. The first is Airbnb. We are the first in the market who's issuing Airbnb warrant. So ABNB C1, so it's not ABNB, so ABNB is actually Airbnb, is providing an effective gearing of 3.9 times, all right, on 2nd of January. But do bear in mind that effective gearing changes from time to time according to the share price, to the market volatility, and a lot other characteristics, a lot other, I would say, factors that's going to affect the effective gearing. Second, Apple C18 and Tesla C6. All right, so Tesla, I would say our Tesla C6 is quite popular among a certain group of traders, because I would say we actually we have a very good Tesla C5 track record, and Tesla C6 is also actually quite good, and there's a lot of people that's seeking after it. All right, so if you have any question, you can just put it in the chat box, and then I can actually attend to it after the session ends. All right. So market terminology, I would say that a lot of you who are really experienced stock investors, you'll be so confused by all this terminology about structured warrants, because when I first look into all these terminologies about structured warrants, it's actually very similar to options, right? But it's not options, because options, it's a form of derivatives that's traded on Bursa Malaysia derivative. So then why structured warrants is so similar to options? All right, so it's actually very similar. It's not options, but we actually use the options pricing formula to, okay, that's a bit too much, but yeah, to actually price on all the structured warrants. All right, so if you want to invest in structured warrants, it's really important for you to know what are those. So I've shown you what are all these key terms, right? Effective gearing, sensitivity, these are the two main things that you need to know before you invest in structured warrant. Of course, the first would be what kind of warrants you want to invest in. Definitely you need to have bullish views on this certain mother share, then only you will be making decision that you're going to invest into call warrants over this mother share, right? That's the very first thing. And then you will look at I would say the expiry date, not too soon, all right? And also the two main things for you to make money would be effective gearing and sensitivity. Okay, so this is a very important warrant tool. We call the RHB warrant website. I will be talking about all these warrant websites because we created this tool for all our investors who is investing in RHB issued warrants. All right, so when you are on RHB warrant website, you can just search it on Google. You go to warrant search and then you can actually search on what kind of warrants that you want to get. Like this is an example on Gamuda. So once I search Gamuda and I have decided to compare not only RHB, but you want to compare RHB, Macquarie, Kenanga, and everyone. So we just put all issuers and then we will actually sort it out for you. So once it's sorted out, you can look into different key terms about these structured warrants. Okay, so this is an example on Gamuda. You can search for Yinsen, you can search for Dayang and other shares. I think I can show you warrant search. So this is actually the website RHB warrant. You can search on Google warrant.rhbgroup.com. Then you will see this page and then go to toolbox warrant search and then you can start searching. But if you need any idea, you want to sort from the highest traded volume to the lowest, then you can just use the sort function and then you can look at all these warrants. Okay, and if you would like to compare, for example, Nation Gate, or there's only one from RHB, right? But if you decided to compare among the peers, then you can just put all issuers and you will see, and you can actually sort it out by exercise price, or maybe you want to look at those with longest dated, then you can actually have a look on all this and compare which one you like the most. Okay, so yeah. All right, so let me see. All right, so for warrant search, and then I'm not sure if I'm sharing my presenter view. Am I? Okay, a bit kanchong, but never mind. So for RHB, for all these structured warrants, there's these specifications that's listed over here. So call warrant, I think I would just use. So for call warrants, like for example, 99 Smart CM. Yes, I am. Okay, let me end the slideshow and I share the full screen. So sorry for the hiccup. Thanks for letting me know. Here. Okay. Yeah, I think it's quite. Okay, so for structured warrants, there's all these specifications that is, I would say that is specified. Okay, yeah. So you will see exercise price, exercise ratio, expiry date, and then you have gearing, delta, and everything. So I will just break it down into two types that you need to know. There are the fixed parameters and also the dynamic parameters. All right, so for fixed parameters, exercise price, exercise ratio, and expiry date, they are fixed upon issuance. So for example, I have issued this 99 Smart CM. So I have we have fixed the exercise price at 1.99 ringgit, the ratio at 3, and expiry date on the 28th of July 2025. So these are fixed. There will only be changes if there's any special corporate action. I mean, any corporate action such as special dividend that is going to affect the share price and also that's going to affect the exercise price and exercise ratio, then only these two parameters will be changed. All right. So it will be quite rare, but when there's special dividend, it's quite special, right? Yeah. So just take note. Just beware. I mean, just take note on all the announcements that we have made on our social media, the Telegram group, RHB Warrant Malaysia or RHB Investment Bank Telegram channel. So we'll let you guys know. While on the other hand, will be the dynamic parameters, which, as I mentioned, is going to be, it's going to change from time to time. It's not always be fixed. Like for example, we have shown the effective gearing 3.6 times on 99 Smart CM. Along the day, I mean, throughout the day, it could be 3.7 times, 4 times, or maybe 3 times only, depends on the movement of the share price. All right, so it's not always fixed. The same goes to sensitivity. All right, so when you see the number of ticks, it could be more sensitive, I mean, more responsive or less responsive. So the ticks will be different. Premium, delta, and so forth, they are all dynamic parameters. So it will be definitely changed from time to time. So it's really important for you to know how to use the Warrant website or maybe other issuers' website if you are investing into other issuers call or put warrants. I mean, you can definitely use their website. So it's really helpful for you to understand how it's going to move up or down. All right. And it's going to be really useful for you before you make any decision, buy or sell the call warrants or put warrants. All right. So effective gearing, once you see the word gearing, you know that it's going to magnify your losses or your gains. All right. So effective gearing means how much the warrant can move. It works at the magnifier. So when you see these times, right, so it means multiplication. So 4.5 times, which means if your share price is going to go up for 1%, your warrant is going to have a gain of 4.5%. 1%, 4.5%. So as easy as that. So if your share price is going up, I mean, went down for about 2%, then just make a very simple calculation. So it's going to, your warrants is going to drop for about 9 to 10%. All right. So it's not fixed, but it will be easy for you if you learn how to use the live price matrix. And that's how the savvy investors trade their warrants, by using the live price matrix. I'll share to you later. All right. So sensitivity is the second thing. I would say, since I'm the warrant specialist from RHB. I have been dealing with so many, professional, experienced traders, and also our very, very, I would say, experienced clients as well, who's investing in warrants for many years. That's this very important thing that as you look at is the sensitivity of the warrant. So besides from effective gearing, they look at the sensitivity because it means how fast the warrant moves. Sometimes you will see, wow, Gamuda went up for 2%. But why Gamuda C20 is not moving yet? All right, so I would say one of the very, very, very simple explanation is that your Gamuda warrant is not sensitive enough. It's not responsive enough to the movement of your mother share. That's why you have to wait, all right, patiently for it to go up or down. All right, so it's very easy to see. I think it's a bit complicated or confusing because we use number of ticks. Just now we use times, right? And this round for sensitivity, we use the number of ticks. All right, so it means that it's okay. How much for an underlying stock must move for your warrant to step up, step down by 1 tick. All right, so these 2 ticks means that the movement in mother share instead of the movement of warrant. So these two ticks is going to tell you that if there's two ticks movement in Gamuda, so means Gamuda have to move for two ticks, move by two ticks, two steps. Gamuda shares up or down, then only the Gamuda C2O or maybe C2F is going to move by one tick. All right, but it's so important for you to know what are the differences, why number of ticks or ticks are important. As you invest in the share, in shares or warrants, you know that share price, they have the tick size is actually different from the warrant tick size. I would say because warrants, they are usually priced less than R1. So for one tick in warrant, they are usually half a cent. So in terms of if the warrant is even cheaper, like 10-cent warrants or 20 cents warrant, 10-cent warrants, then half cent would be quite a big amount in terms of percentage. So that is also how I'll show you through the life price matrix, but that's also how it's going to be in line with the effective gearing. Okay. All right. So we have talked about the effective gearing, sensitivity, and third would be the intrinsic value. So before, I would say for the beginners sharing or beginners webinar, we don't talk a lot about intrinsic value because I would say this is a bit more towards the intermediate level, because for intrinsic value means that the difference between the price of the underlying asset, which means your mother share, and the exercise price, or sometimes we call it the strike price, depends how they call it, but usually we use exercise price as the word that we use on our term sheet. So the intrinsic value means that the underlying price minus exercise price. So let's do a very easy calculation, a very simple mathematics. YTL power C58, C68, and C74, they are all call warrants over YTL power they are actually issued by RHB Investment Bank. All right, so the share price was R4.36, 2nd January, okay? So exercise price, when we first issued them, we have set differently because we issued at different time, and then we have a different view, and we would like to provide a different strategy for our investors. So we have very different exercise prices. R5, 68 cents, 360, and 320. So very simple calculation. You just use the share price minus of the exercise price, and you will see whether they are intrinsic value for your warrants. Okay, so if you know how to look at the intrinsic value, which means the share price is higher than the exercise price, you also can tell that whether it's in the money or out the money. And we call it the moneyness. So intrinsic value, moneyness, they are basically the same thing. So when we talk about, you're going to get money because your warrant is expired in the money, this is what it means. It means that upon expiry, the share price, underlying price is higher than the exercise price. Then you get money. Okay, another thing that why is it so important is that if you take a look at the bid price and the ask price for these specific warrants, usually for out the money warrants, normally when it's close, it's if everything, I would say everything, like for example, they have same expiry date, everything, they are the same. The bid price and ask price, you will see they are different. For those it's out the money, the bid price are actually cheaper because there's no intrinsic value. So they only left with time value, and it's really, really little. So it's only half a cent. You wouldn't want to buy, I would say in general, we wouldn't want to buy warrants that's basically worthless because it's only half a cent. All right. But for warrants, they are in the money, which they have intrinsic value. Like for example, R4.36 share price, and then exercise price is 360 and 320. You have intrinsic value. But in that case, you actually if you look at the bid price and the bid price for the warrants, they are actually relatively more expensive than those out the money. Okay, while everything remain constant. So this is how we look at it. So it's really important for you to know how this is going to affect the performance or the characteristic of the structured warrants. Okay, so this is very simple concept. When your warrant is in the money, everything held constant. Uh, if it's in the money, it will be more responsive, which means it will move faster in accordance to the movement of the mother share. But the effective gearing will be lower. So you won't see like 10 times, 5 times of effective gearing normally, but you will see maybe like 2 times, 3 times. But if you're okay, if you think you want to trade it, like intraday or maybe like a few days short term, you can look for something that is more responsive. While for warrants, it's out the money. They don't have intrinsic value, and you will see they're usually slightly cheaper, right? Relatively cheaper. They have better effective gearing. So you want it to be like 5 times, 8 times, 9 times. Yeah, you see something like that. But in that case, it will be less sensitive, which means it's not going to move that fast. It's not going to follow the performance of the mother share that fast. Okay. Yeah. So these are the differences in the money or the money with intrinsic value and without intrinsic value. All right. So premium is also one of the very important, I would say, important factor that affect our selection decision. Okay. So it does not mean that when it's really at low premium, it's super cheap. All right. It could also due to the warrant is priced very close to the share price, or maybe it's we are actually giving a very low implied volatility or very short time to maturity. So you have to make sure that this warrant is not very close to the expiry, and which induce a lower premium. But for high premium, doesn't mean that it's super expensive. I mean, yes, but it doesn't mean that it's not good, right? So warrant is priced higher due to high implied volatility or maybe longer time to maturity because you have bigger or you have more time value in your warrants. Okay, so just be careful when you invest. If you're investing purely just based on the low premium, then it's a bit dangerous. So you have to look at other terms, other characteristics such as the expiry date and other factors as well. So I'll share with you later on the selection criteria. Yeah. So adopt Savvy selection techniques. So this is why we have the webinar today. I have encountered a lot of investors asking, I would say same question. They would say, oh, I will just buy this warrant because the effective gearing is very high. If the mother share is going up, then I will be making a lot of money. But as I mentioned before, maybe a very high effective gearing warrants is not really sensitive. So if the warrant, I would say if the mother share does not move that much, maybe your warrant is not going to move at all. Right? So how experienced and savvy warrant investor they make their decision? So these are the 4 main things that I figure out through all the conversations and looking at all the charts. Effective gearing, sensitivity, exercise price, that's really important, and also the live price matrix. So live price matrix, I would say, is the really is a game changer for everyone. Okay, come. So this is how a live price metric looks like. It's on the RHB Warrant website. And then for RHB Warrant website, you can actually compare a few price matrix. I have chosen 99 Smart as an example because we have 4 99 Smart warrants. So this is 99 Smart CM and CS. So if you're looking at these two price chart, you will notice there is this color thing. Okay, so this color coded numbers, they are actually the live price matrix. So this is an example. This is an example for 99 Smart when it was 2 ringgit and 46 cents. CM, the exercise price was 1 ringgit and 99 cents. So this is fixed. And for CS, it's actually out the money because the exercise price was 2 ringgit, is 2 ringgit and 70 cents, while 99 Smart is only 2 ringgit and 46 cents at that point of time. You can actually compare how is the movement of the bid prices of CM and CS using the live price matrix. So how do you look at it? You have to first look at the mother share bid price and ask price. And then you will locate which level you want to enter or you want to exit. Okay, let's make an example from entering the trade. So if you currently it's 2 ringgit 46 cents and I think I am buying it because it's here. If I'm going to buy CM, it's 246, 247, and then the bid price is 19 cents and 19 and a half. So if I'm going to buy here and sell here, I'll be making money. All right. However, since you now know how to use the live price matrix, you can compare CM and CS. So if you are going to buy at 246, so for CS is 7.5 and 8 cents. And then if you want to sell at 249, you are not going to make a lot of money because it's still 8 cents, right? But you're going to make more if you're going to hold it up to 2 ringgit and 51 cents. When the 99 Smart is 2 ringgit and 51 cents, you can sell it at 8.5 cents and you'll be making more money. All right, so I put it clearly over here. Share and warrant. So example 246, 7.5 cents. And then if you are selling it when the mother share is 2 ringgit and 51 cents, you'll be making from 7.5 to 8.5 cents. This is bid to bid, okay? So if asked to bid, then you can use your own calculation. And this is how we actually look at the live price matrix. So in this case, I cannot tell you which is the best warrant, but it depends on your own view and also your target price that is set for 99 Smart. Do you think that it's going up to 2 ringgit and 49 cents and it's going to come down after that? Is it a very strong resistance? Or you think that it's going up to 2 ringgit and 51 cents and you'll make your decision through, comparing the live price matrix and invest either CM or CS. Okay, so again, I use the same example. It'll be easier for you. So for RHB Warrant website, we have designed it in a very user-friendly way. So once you are on the live price matrix, the price matrix page, you can actually look at the effective gearing and sensitivity as well. Okay, so when you look at this effective gearing and sensitivity, when effective gearing is higher, then you know that you're going to get a better percentage, better return in one bid for one bid. So these are the differences. First, if you are looking at getting in here to here, then you're going to earn 2.33% because one bid is smaller because CM is relatively more expensive. Is currently priced at 21.5 cents. All right. While for CS, because its price, I would say the warrant price is actually cheaper. Not cheaper, I would say. I'll say lower. It's at from 9 cents to 9.5 cents. So in terms of percentage, it's actually higher. So one bid difference is 5.55%. All right, so it's going to be translated back into effective gearing. If you use a very simple calculation method, it's about the same. So effective gearing is going to give you a more straightforward view on how much you're going to get. But if you want a really, really accurate calculation on that day at that point of time, then you need to use live price matrix. All right, so with this, I actually covered on the four things, right? Exercise price, effective gearing, sensitivity, and life price matrix. So I would emphasize that the warrant website is really important. So not only RHB, I would say not only RHB Investment Bank, we have a warrant website. I would say our peers like Macquarie, Maybank, they do have their own warrant website as well. And if you are investing in their warrants, you must use the website and you must know how to use their website as well. They will not look exactly the same. They will not be, they are not the same, but you just need to get used to it and look for the very important terms like the expiry date, the exercise price, gearing and sensitivity, and also the life price matrix that they offered on their website. Right, so I think, oh, okay, so all right, so I think before I go into the risk section, I have some time to answer some of the questions. So I think we have friends who would like to elaborate more on the exercise ratio. So this is the exercise ratio over here, 3 and 3, so it's the same. It's going to affect the sensitivity directly. But okay lah, never mind. I'll just take it at the Q&A because I think I only left with half an hour. All right, so for savvy investors, they always know how to manage their risk. I have definitely there's all these there are investors who just started, they just bought it and then they make money because the share went up. But when they are making losses, are they going to cut loss, or they are going to hold it until expiry or until it's worthless? So I think that is a very very, I would say it's very significant to differentiate how an experience for savvy for investors and also the amateurs, right? So there's so many risks in investing. We know that uh, that's a market risk for sure, and so many other risks, your capital risk, the issuers reputational risk and all. But I would emphasize on three things: liquidity risk, leverage risk, and also time decay. That's really important. Okay, leverage risk, because we all invested in structured warrants because the warrants, they are going to give us a lot, really good leverage exposure. If for example, if I invest in Tenaga, it's going to give me 9 times of gearing. I don't even have to subscribe to a share margin account or, get pinjam duit and invest, but I can actually invest through Tenaga C2O and get 9 times of gearing. Wow, that's really good. However, bear in mind that the effective gearing is a double-edged sword. So you're going to make money, you're going to make a lot of money, and also you're going to lose a lot of money as well if the mother share is not doing very well. So first, limit your position size. You don't, put all your eggs into one basket. If you have 100,000, you're not going to put all 100,000 in just one warrant or one and only securities. All right, so limit your size, manage your capital. Secondly is to set a stop loss order. But how do you actually set a stop loss, right? Do you still remember how we use the life price matrix? You can actually look at the bid and ask price of the warrant. So if you have a set loss, you have set a stop loss, or you have an exit price for the mother share, you know that it's going to break the support and go down all the way. You can also set a stop loss for the same level. I would say at the same level at a certain bid and ask price for the warrant as well, so you don't actually get to lose so much money in case that you miss out on any of the news or any of the share movement. All right. Third is that to choose warrants with moderate effective gearing. Yeah, so during good times, bullish moments, we tend to go for something that is like giving you a lot more money than the rest, like 5, 6, 7 times of effective gearing. Because if you make money, you will make really good money. But it's important for you to know how to manage the risk as well. You can look for something that is with moderate effective gearing. So in your mind, you know that if it goes down, it's not going to hurt you that much. So that is how we manage the risk, right? You can also actually choose, if you are really, if you are really bullish on a certain share, like for example Gamuda, C2O, C2F, one is like really good, giving you really good effective gearing. Another one is really sensitive. You can buy both, so you can just adjust your position as well, right? So just don't put everything in one basket. Secondly, would be the liquidity risk. So I think a lot of friends in the comment section also mentioned about the liquidity that's provided by the market maker, because we actually provide liquidity. So we have to be there all the time to give you the bid and ask price. So the bid and ask price, you will just check the live price matrix and we will be giving you the same price. But bear in mind that the price matrix is always delayed. So it's not live. So you will expect a bit of discrepancies in terms of any movement and all. But just bear in mind that there will be some delay in displaying the bid. Okay, but we will still be market make. We'll still be market make at a fair bid for our investors. All right, so first you have to trade liquid warrants such as with tight bid-ask spread. Okay, if you're only using your trading platforms, you will be seeing the spread maybe like just half, I would say half a cent or maybe one bit difference. Sometimes you see very wide spread while you're not sure. Use the live price matrix that's on all the or the world websites from different issuers, to make sure that the market maker is going to sell you at this certain ask price and buying back from you, at willing to buy back from you at a very tight spread. So in case of you would like to buy and I think I want to sell, then you will sell it. You're not going to lose so much out from the spread. If you're an existing investor as well, if you have bought these certain warrants at for example 10 cents of ask price, you are going to you can actually check on the price matrix as well from time to time, to make sure that when you're selling back, everything is tracking in, and they are in line with the live price matrix that's offered by the issuers. All right, so however, if you are going to buy some of the very popular warrants, and then when you decided to buy, just notice that the spread is really huge, so you can actually explore other warrants. But if you really like it, then you have to bear the consequences of having a very huge spread. All right, secondly is to avoid off-market trades. For us market makers, we are actually we market make at a very certain time frame. So if you're going to buy very early, like 30, maybe like 9 or maybe 8.58, you just put one price there. You want to put very low price, maybe it's not going to match, because we will just market make according to the mother share at 9:01 a.m. to 12:29 p.m. for the AM session, and then 2:31 p.m. to 4:44 p.m. for the PM session. So before that, we're not going to market make. Yeah. So third is to avoid the sold out warrants. So as I mentioned, if you miss it, let me tell you again. So warrants, we only issue a very limited units of warrants. For RHB, we issue 35 million units of that warrant. So if there's these investors who really love our warrant, for example, Dayang C38, they will just buy a lot, buy, and they decided to hold it. They put it in their investment portfolio instead of selling back to us, the market maker. In that case, I don't have enough warrants on my hand as a market maker. We are unable to provide a very tight spread for you because I don't have any warrants to sell to you at that price. So in that case, for RHB, we will actually mark them as sold out or low on inventory. Then you will see in the market the price of those sold out warrants is not going to follow the live price matrix as stated on our website. However, it's not something that you need to be really worried about if you're an existing investors. If you're an existing investor, because for existing investor who's holding our warrants, the market maker, like RHB Investment Bank, will be buying back from you at a fair bid. Yeah, so only the ask price will be expensive, but the bid will be still fair, so you can still sell it back to us. Or actually, you can sell it back into the market if someone else is going to take it from you. Okay, so avoid trading the sold out warrants. And last but not least is to use the price matrix for the warrant prices transparency. So actually for the live price matrix, for our investors who's using the RHB website, and also our traders who's trading at the trading desk, they will be looking at the same screen. So that's what we do as an issuer and also RHB Investment Bank. We always promote price transparency. That's why we have a live price matrix for you to use and refer to whenever you are investing with us. Okay, time decay. All right, so time decay is something that is quite scary, I would say. Time value, like I have mentioned about intrinsic value for the warrant, and that's this intrinsic value and time value that is going to make up a warrant. So, however, there's expiry date for warrants, like car, it depreciates really fast. So for time value, it decays faster when this warrant is very, very close to the expiry date. Okay, and we call the time decay as theta. So this is the word theta. So this is the Greek for time decay. So how do you avoid very, very fast time decay? Because sometimes when you invest in a warrant that when you bought it, it was 10 cents. But it's really close to expiry. It was suddenly, after 10 days, 20 days, it has become 6.5 cents, while the mother share never moved. But your warrant is going to depreciate while the share is not moving. So, and then you'll be thinking, I think the market maker is cheating my money. Okay, that's how we actually got all these, questions from. But there's this thing called the time decay, theta. So it's going to take out, to make your warrant value lesser and lesser day by day. Okay, so first you have to choose warrants with longer time to expiry. So if it's going to expire in 1 month or 2 months, I would suggest not to invest in it. But if you would like to, you really like it and there's no other choices, then make sure that you monitor it closely. And secondly, avoid holding until expiry because it's going to be cash settled for all structured warrants, but only warrants that's with intrinsic value or in the money is going to be cash settled. So means that you get back. But if you invested 10,000 in that warrant and you forgot about it and it expires out the money, means that you not going to get back any of your initial investment back. So really you have to be extra careful while investing into near to expiry warrants. And third, focus on intrinsic value. So make sure that the warrant that you're buying, the mother share is also moving up. So it's going to give you better intrinsic value if it's, more than the exercise price. Okay, so I think it's time for Q&A. So first, I will say the summary of my whole session is that first you have to bridge your to tighten or close all this knowledge gap of warrant mechanics, how warrant works, and also how to manage the risk before you invest into warrants. Secondly, is to use the technology and the tools to make decisions. So don't just use Google or just a trading platform, but to leverage on the warrant websites that is provided by all the issuers and to make informed decision using those websites and also live price matrix. And third is to overcome all the misconceptions about structured warrants and be confident. All right. So don't think that structured warrant is really, really risky. It's only risky when you don't know how to trade them. But if you understand them, you know how to manage the risk, it will be really powerful for you to make money. Okay. All right. So I think, should I just answer the question? I think
Hello?
so. Oh,
Hi.
hi, Nazura.
Okay.
Oh, Q&A session. Yeah. Nazura, you want to moderate or I will just
Yeah,
the question?
me. Okay,
Okay.
so thank you, Miss Vanessa, for your invaluable insights and wonderful sharing with us earlier. We will now proceed to the Q&A session. I encourage all attendees to submit any questions you may have in the Q&A box so that Miss Vanessa can address to your questions accordingly. So, we go to the first questions from Encik Sohaidi. How do we get the effective gearing?
How do we get the effective gearing? You want the calculation or you want to look at how the effective, where is the effective gearing? Okay, never mind. I'll just use the tools that we all have been using for, you know, warrants for investing in warrants. So you just go to the RHB warrant website, warrant search, you look at the, whichever warrants that you want to look at Gamuda because Gamuda very hot recently, right? And then this will be the effective gearing. But this is off-market prices and off-market data. For the website, it's better for you to use it during market hours because it's delayed and then we will track according to the live prices. It will be more accurate for you to use it during the market hours. But this is just for a reference. So this is how you look at the effective gearing. So for effective gearing, if you want to dissect into technical way is delta time gearing, but effective gearing is easier for you to 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 calculate how much you're going to get in the future. Yeah, but it's not guaranteed. Okay, so it's just just a very good reference for you to invest. Yeah, this is the effective gearing. And if you decided to, for example, C2Z, you think C2Z is okay, you want to invest, you click onto the C2Z and then you will go to this page. And this is the effective gearing, 5.2 times. And on your right hand side will be the Gamuda share price and Gamuda warrant. Yeah. You can't see the screen. Hey, sorry. Am I sharing the screen?
No, me.
Huh? Oh, wait, sorry. But it's showing I'm screen sharing, but it's okay. Let me try again, okay?
Okay.
Am I sharing the screen? Am I sharing the screen? Okay, thanks guys. Thank you, thank you. Okay, sorry. So yeah, this is Gamuda, and then when you click onto Gamuda, and then you will see effective gearing over here. Yeah, so use it during market hours. Okay. Next question.
Okay, so next question. Trade warrant need to set set cut loss. Sorry, sorry.
Any investment would you need to set cut loss,
Ah,
but maybe I mean it depends on your invest. How do you invest? It depends on your trading style. If you don't like to set a cut loss and you have like it depends on your view actually. So for structured warrants, do bear in mind every one of you, it's actually a tool, and then the prices are derived from the mother share. So for all the fundamentals, the performance of warrants, it's all depending on the mother share. The first thing that you have to do when investing in warrants is that you need to have a really good understanding on the mother share performance, and then only you will choose which warrant to invest. Okay, so for cut loss, all right, Gamuda, since we are on this, are we still on this screen? Gamuda screen? Okay,
Yes.
yes, okay, thank you, Nazra, let me know, okay. So, 445 example, I think close at 446 something over here. So if you invest, then it's 13 cents, okay, 12.5 cents. So how much losses you willing to bear? So if you think that Gamuda is going down, 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 like 4 ringgit or 4 ringgit and 10 cents, and that would be your cut loss point for Gamuda C2Z, because you know maybe it's only going to it's going to worth about 8 or maybe 7 cents. We are not sure. Yeah, so use the price matrix to gauge your exit point as well. Yes, set a cut loss point for your trading if it's applicable to your trading strategy. Okay,
Okay,
how I answer your question?
so
Yeah.
next questions. From where can I get live price metrics? Example in RHB Warrant website.
Yes, thank you. He's helping me to promote my website. Okay, so this website is free for everyone. You don't even need to sign in. You don't need to have a RHB account to use the website. It's open for everyone because we want so many people to invest in RHB warrants. Go to RHB warrant.rhbgroup.com. So there's this toolbox. You can scroll down, it depends on you, but I like to use toolbox. You can go warrant search to search for if you don't know which warrant to look at. But if you have warrants in mind, you can just go directly to warrant metrics. This is the page that you can do all the comparison. So YTL C1B, an example for YTL Corp. I have another is C95, and I have YTL C86 as well. And you can actually compare them next to each other, side by side. The expiry date, for example, C86 is next week. You're not going to invest this, so you don't have to look at it. Just compare C1B and C95 over here, and you can look at the price matrix already. Yeah. So this is how we look at it on the RHB Warrant website.
Okay. So next question from Ming Yu. She wants you to elaborate more on the exercise ratio.
Okay, so exercise ratio, as I mentioned, is a fixed parameter. So when we issue this warrant, we have fixed the ratio. So ratio means that we break. Okay, it's like a piece of cake, right? So how many people I want to give the slices of cakes to? Okay, I want to cut to 4, so everyone gets a bigger piece of cake. And if I want to cut to 8 pieces, so everyone gets a smaller piece of cake. This is going to affect the warrant price as well. So if you look at some newly issued warrants, they're so cheap, they are less than 10 cents. Not less than 10 cents, okay, less than 20 cents. Or they are so expensive. Or why is this warrant is priced at 20 cents upon issuance? Why is it so expensive? But if you compare everything side by side and you look at the exercise ratio, sometimes the exercise ratio is smaller. That's why it's more expensive for the warrants. And also it will be highly related to the sensitivity of the warrants as well. Why I say so? As we know that warrant bid is half a cent. So if your warrant is more expensive, one bid, half cent is actually, I would say it's actually smaller. And that is how we actually look at the sensitivity and also the effective gearing. And then if you want to know more, right, just use the RHB Warrant website. When you look at everything, it's the same exercise price, same expiry date, but when the ratio is different, usually the one with smaller ratio is more sensitive, while the bigger ratio, it will be less sensitive. but cheaper in terms of the warrant price. Yeah. Okay, I think I answered the question.
Okay. So next question. How is the time delay calculated or why is it not in Warren Marty's side? I recently bought Tenaga C20 and noticed that the warrant price decreased in price after holding over 2 to 3 weeks of 1 to 1.5.
Oh, okay. Davy, right? Saw your. So for the time decay, is calculated. We actually use a option pricing formula to look into the time decay of the warrant. So time decay, it change from time to time, means that at the beginning of when we first issue the warrant, the time decay would be lesser, and then when it's closer to the expiry, it's faster. So for Tenaga C20, it's not C20, but it's C20. It's going to be expired on April. So once you can actually use the filter over here, but if you just want to look at the Tenaga warrant, you click here and then you click this thing, the blood thing. Sorry, I think it's hidden. It's a hidden feature. So you click this round thing. I'm not sure if you can see this round thing. Okay, you click inside and then you will see the theta, THETA. So this is how we translate it into numbers. Minus 0.0003 means that 0.003 cents every day. So if you hold the Tenaga C20 from today, like if you bought it at 3 cents and then you hold it for 10, 20 days, it's going to go down for maybe one tick if Tenaga is not going to move. But if the share price move down, then of course your warrant bid price will go down as well. But if the Tenaga share price does not move, your warrant will still go down one by one bit maybe when it's it's more than, depends on how many days that you're holding for. So this is the details that we actually providing to you on the warrant website. It's a bit hidden, yeah, this blood thing. So yeah, it's over here. So David, you can actually use this page. You can use this warrant website, and do note that the time decay change from time to time as well. It's going to be larger, maybe skewed to the end of when it's really close to the maturity. Yeah. So, but you use it during the market hours would be better for you. Okay. I think I answered David's question.
Okay, so next question. I have few questions to ask if you don't mind, but let me choose two. So the first question for the theta of the structure warrant is that the smaller the negative value, the longer the time for the structure warrant to depreciate. For example, theta value of negative 0.001 takes longer time for the structure warrant to depreciate compared to negative 0.0003.
Yes. Because one day you're going to. Is this a maths question? Okay, let me see. I think yes. So yeah, because it's the same perpuluhan, right? If it's the same perpuluhan, then you would take lesser time for the minus 0.001 cent than minus 0.003 cent. Yeah.
Okay. So the second question is why sometimes the structure warrant price does not follow the price metrics. For example, mom price 1 ringgit at buy Q, son will buy 3 cents at buy Q in price metrics, but in the market depth of structure warrants still show 3 cents in sell Q when mom price 1 ringgit is at buy Q.
Oh, so means the mother share price, right? For the market makers, we will definitely buy according to the price matrix. First thing, you have to check whether the price matrix is refreshed, because as I mentioned, the feed is usually delayed about 15 to 30 minutes, but it's usually if it's within the same day, right, it's usually about same range. All right. And then the market depth sometimes is not entirely all queued by the market makers. There will be some other investors who's actually uh, giving, their offer and also the bid price as well. Yeah. So I would say if you think that it's different from the price matrix and you want to have better clarification, you can definitely call us at our hotline. So then we can actually check it for you. So if
Mm.
you really see it's different, then you definitely have to call us so we can check if there's any technical error and all. Yeah.
Okay. So next question. Based on your webinar, it's more to call warrant. What about put warrant?
Okay. All right. Yeah, definitely we have put warrants in the market as well. Call warrants, it's actually, I would say 90% of the structured warrants in Malaysia, stock warrants, they are mainly call warrants, while the rest of 10% they are put warrants for stocks. But for index warrants like Hang Seng, there are definitely a lot of put warrants as well. All right, so if you want to know more about put warrants, it actually works the same. Effective gearing, sensitivity, everything works the same. It's just that when the mother share is going up, your warrants is going to flip downwards. So it's terbalik, opposite direction. Okay, so when call warrants, it moves together, right? So for put warrants, it moves terbalik. In in the case, if you're expecting, since the CPI data is 2.9% in line, aligned with market expectation. So if you have views that Hang Seng index or maybe some other indexes or is going up tomorrow, in that case you definitely invest into core warrants, right? But if you have the view that or you want to do some hedging on your current investments, you think that the Hang Seng index is going down, you can actually consider invest into the Hang Seng put warrants, which is issued by other any issuers in the market. Use their live price matrix as well because it looks the same, but the price is the ballet lah. You would see when the Hang Seng index goes down, you make money. All right, so I hope I answer your question. And also, Mr. Visalan, you also have another question that does put warrant react as call warrant with mother share? No lah, I would say different. I mean, all the characteristics are different, but it's just that the reaction is different. So put warrant, the ballet, while call warrant, it moves the same direction. Okay.
Okay. So next, when trading US stock structure warrants, which market is referring since Bursa trading hours is different from US trading hours?
Okay. Hi, Esther. Thank you. Okay, wait, sorry. Let me read read again.
Uh,
Esther's question. Okay, when
uh,
trading US stock, which market is referring? Okay, you will be trading according to Bursa trading hours because our traders only work during the okay,
oh.
because it's listed on Bursa equities, right? So we'll be following Bursa market hours, and we are actually referring. I would say the reference price for our price matrix is based on the after hours price of the specific stocks. For example, Tesla. So you would not see a very huge movement on the Tesla C6 warrant because that day, I mean, when we are trading the warrants, right, the market in US is closed. That's why it's not going to move. It will be suitable for those who would like to hold it for a few days, 2, 3 days, and then they do not have really they don't really have time to look at it during nighttime when they want to invest in Tesla shares. They want to sleep, so they still they are still really confident in the Tesla performance, so they can actually invest in C6, and then the time would be following the Bursa market time. Yeah.
Okay. So last question from Encik Muhammad Asri. How to know whether it near to sold out warrants? Where to refer at?
Okay, Mr. Muhammad. So for one thing, it's more straightforward for you to refer is, sometimes when you're trading, on your trading platform, you would see very huge spread. Buy and sell is like huge spread. and then you think something is fishy, right? Okay, it's not fishy, you think something is not right. You can actually go to the issuer's website, like for us, RHB, go to warrant search, and I will actually mark it over here, but like here, if you can see, my EG C7F, my EG C7G, they are both low on inventory. So if you decided to invest in C7F, and then when you click into it, you see this box low on inventory, and you look at the live price matrix, the spread is really huge, 1 cent and 5 cents. I don't think got people would want to buy this type of warrants at this moment. If you are, if I'm right, if I'm correct, yeah, like who would like actually buy it at 5 cents and sell it back at 1.5 cents? So this is how you actually determine whether it's sold out or not. And I believe other issuers, they will actually mark it on their website as well that is low on inventory. So you just avoid the sold out warrants. It will be great for you. So you can go, there's so many warrants in the market that you can buy. So you don't have to really go for warrants with really huge spread.
Okay.
Okay, Mr. Muhammad. So I think chat box still got, is it? Some question?
Yeah, last question from Encik Suhaidi. So the info from website are only for warrants issued by bank? What about the warrant from Mothership?
Oh, okay. So you are looking for the company warrants, right? Yes, you're right. Correct. Good question. All right. So as we mentioned that structured warrants and company warrants, they are different. So company warrants, they don't have website because they only issue one warrant or two warrants from by their own company. So I think you can actually look for their information on KLSE Screener or Google, if or maybe refer to their term sheet as well. Yeah, so I think that would be okay for you, or maybe you can call them for the information, because I think uh since they don't actually have a market maker, they don't really provide bid and ask price for you. So I don't think they would have any public information like this for you to compare. Nothing to compare, right? Because they are the issuers. Yeah.
Okay. So that's all from the questions from the Q&A box. So we would like to sincerely thank Miss Vanessa for taking the time to respond to the question asked. I hope that all of you have acquired new and useful knowledge from this session. May the insights shared today prove to be advantageous in your investment and trading pursuits.
Nazra, I think there's
Yes.